Imagine walking into a grocery store. You pick up a bag of dried apricots, maybe some figs. It's a humble, healthy snack business. You know the type.
Mm-hmm.
Now imagine blinking, and that same grocery store is suddenly a massive energy company.
Right.
And not just an energy company, but one announcing a net profit of over 2 billion lira in a single year.
That is a staggering amount of dried fruit.
Right. But here's the thing. The fruit is gone. The harvest is now electricity, or at least that's what the sign on the door says.
But as we're going to find out, the sign on the door might be a little misleading. Or, well, it's not telling the whole story.
Exactly. We are looking at one of the most radical corporate transformations I've ever seen, a metamorphosis from food to renewable energy. But here is the multi-billion lira question we need to answer today.
Is it real?
Is that massive, eye-watering profit actually coming from the solar panels? Or is it coming from something else entirely?
That is the mystery. Because when you peel back the layers of these financial statements, you realize that this company isn't just pivoting its product, it's pivoting its entire reality.
Welcome.
It's great to be here.
Today we are doing a serious deep dive into the annual report and financial statements of Lydia Yeşil Enerji for the period ending December 31st, 2025.
Yeah, and this is a fascinating one.
And I want to be clear about our mission today. If you are a retail investor, the learner, you see a headline number like 2 billion TL profit, and your thumb naturally hovers over the buy button.
It's a natural reaction.
Yeah.
Big numbers trigger big emotions.
Exactly. But our job is to freeze that thumb. We need to decode these complex sheets to see if the fundamentals actually match the hype. Is this an energy giant in the making, or is it something stranger?
We need to figure out if we're looking at an operational powerhouse or, a financial vehicle that just happens to be wearing a solar panel hat.
I love that visual. A hedge fund wearing a hard hat.
Exactly.
Let's first get to know the company a little.
It's a story with a lot of twists. As you mentioned, this company started its life back in 2009 as Taze Kuru.
Right, the food business.
They're in the food business. Dried foods, snacks, a very tangible, simple business model.
Simple is good, but simple doesn't usually make billions overnight.
No, it doesn't. Fast forward to September 2024, and the name officially changes to LYDYE Yeşil Enerji Kaynakları. They leave the food aisle and enter the energy sector.
A complete identity shift. And they moved their headquarters too, right? They aren't in a warehouse anymore.
Definitely not. Their headquarters are now in the Zorlu Center in Beşiktaş, Istanbul.
Wow.
That is a very prestigious high-rent address. It screams corporate finance, much more than solar farm.
So the suits are in Istanbul, but where are the boots on the ground? Where are the actual solar panels?
The machinery that ostensibly makes the money is in Çankırı, in the central district. They operate solar power plants, GES.
Okay.
They have facilities named URIC 1 through URIC 5.
URIC 1 through 5. Okay. And how much power are we talking about here? Is this enough to power a city?
It's decent, but not massive. The total installed power is about 6,290 kilowatt peak.
So it's at like 6.3 megawatts.
Yeah, roughly 6.3 megawatts. To put that in perspective, it's a solid commercial installation, but they aren't powering all of Istanbul with this.
Okay, so roughly 6 megawatts. Keep that scale in mind, everyone. Now, I was reading through the organizational history in the report, and I saw a simplified merger mentioned in June 2025. What was that about?
That was a bit of corporate housekeeping. They essentially absorbed their subsidiaries, Birinci Enerji, and the old Taze Kuru net food marketing arm.
Ah, okay.
So instead of having a web of companies, they collapsed it all into one. So as of this report, there are no separate subsidiaries to consolidate. It is one single entity.
Okay, that makes sense. Cleaner structure. But speaking of structure, I turned the page to the human resources section, expecting to see a breakdown of the team. Engineers, maintenance crews.
And what did you find?
I found a zero.
A literal zero.
Zero. The report lists the number of employees as of December 31st, 2025 as 0. It was 3 the year before, which was already low, but now it's none.
So who's dusting the solar panels?
I have to ask, who is turning the lights on? Is the factory running on autopilot?
It does sound like a ghost ship, doesn't it? But there is a logical, if slightly complex, explanation. The report states that all operational, technical, and necessary personnel are provided via service procurement.
So they outsource everything.
Primarily from their parent company, Lydia Holding. So the people doing the work exist, but they aren't on Lydia Yeşil Enerji's payroll. They are hired guns, essentially.
That feels convenient. It keeps the headcount costs off the books. Directly, at least.
It does.
Speaking of the parent company, who is actually steering this ship?
The ownership is very concentrated. Lydia Holding A owns roughly 64.9% of the shares. The rest, about 35.1%, is free float.
So that's us.
That's the portion available for you and me, the retail investors.
And the people at the helm.
The chairman is Enver Cevic. But a name that really stands out to me is the CEO, Dr. Semra Demircioğlu. She was appointed in July 2025.
I looked her up. She's impressive.
She is. And what's notable is that she isn't an electrical engineer. She has a heavy finance background and a PhD.
Which feels like a clue, doesn't it? If you hire a finance wizard to run a solar company, maybe the focus isn't entirely on the sun.
It definitely signals the company's direction. Also, from a governance perspective, she represents 20% female representation on the board, 1 out of 5 members.
It's a start.
It is, though many ESG investors look for higher ratios these days.
And since we're talking about the board, let's talk money. They aren't working for free, surely.
Definitely not. Top management benefits total just over 3 million TL. But the interesting detail is the board members' monthly fee, the huzur hakan.
The right to peace. I love that term. How much peace are they getting?
They are getting 45,000 TL per month.
45,000 lira a month. Now, depending on who you ask, that's either a nice salary for attending a few meetings, or it's peanuts compared to the billions on the balance sheet.
It's actually relatively restrained for a company posting these kinds of profit numbers. I've seen much higher in the sector.
Fair point. So they're not looting the treasury for board fees, at least.
Seems that way.
So before we get into the heavy numbers, let's look at the battlefield. They are producing electricity in Çankırı. What's the landscape like?
Well, they are swimming in a big pond. Turkey's total installed power is over 122,000 megawatts now.
Wow.
And solar, or GES, makes up about 20.5% of that mix.
So solar is a huge chunk of the grid.
It is, and it's growing. The projection is for consumption to hit 510 terawatt hours by 2035. The tide is rising, which should lift all boats.
Okay, so we have a debt-free solar company with no employees, backed by a holding giant sitting in a hot market. If you had to do a quick SWOT analysis, how does it look?
Let's break it down. Strengths. The backing by Lydia Holding is huge, deep pockets.
Yeah.
And importantly, they are debt-free regarding financial bank loans. They own their assets.
Okay. Weaknesses.
The operating loss, we'll get to that. But the core business is losing money. And the zero internal staff creates a heavy reliance on the parent company. If Lydia Holding sneezes, this company catches a cold.
And opportunities.
Turkey's energy hunger is insatiable. Plus, as we'll see, they have a high asset value, which they could leverage to buy more plants.
And the threats.
Regulatory changes are always a risk in energy. Tariffs can change overnight. High inflation is another. And the biggest threat, in my view, they are heavily dependent on the valuation of financial assets. Their profit is at the mercy of the stock market.
That is a perfect setup. We know the players, we know the field. Now we can move on to our analysis.
Let's open the books. And remember, listeners, all these figures are inflation adjusted to December 31st, 2025 standards. We are looking at real purchasing power here.
I want to start with the top line. Revenue. Sales. The actual cash coming in from selling electrons to the grid. What are we looking at?
We are looking at 53.2 million TL.
53.2 million. Okay. Now, looking back at the previous period, what was it?
It was 71.5 million TL.
Wait a minute. Hold on. Revenue is down.
By quite a bit.
They pivoted to energy. Everyone is screaming about how hot the energy sector is, and their sales dropped by nearly 20 million lira. How does that happen?
It indicates a contraction in sales volume. Even though they're fully an energy company now, the revenue generation from those specific plants in Çankırı hasn't ramped up. It's pulled back.
So, less sun.
Maybe it was weather-related, maybe it was downtime, but the cash register rang less often this year.
That is concerning. If I open a lemonade stand, I want to sell more lemonade every year, not less. What about the cost to make that lemonade?
The cost of sales was 34 million TL. That leaves them with a gross profit of 19.2 million TL.
Which is also down.
Also down from 23.2 million the year before.
So the gross margin is roughly, what, 36%?
Correct. Now, 36% gross margin is healthy on paper. But here is the trap. Gross profit just covers the cost of production. You still have to pay for the headquarters, the service procurement.
Right, the overhead.
The general administrative expenses were 20.6 million TL.
I can do that math in my head. If you made 19 million in gross profit and you spent 20.6 million on administration,
You're in the red.
you lost money.
Exactly. When you look at the operating profit, or İstisfel, the company actually posted an operating loss of 42.4 million TL.
Okay, I want to pause here. This is absolutely critical for everyone listening to understand. If you stripped away everything else and just looked at the business of making electricity and selling it, this company lost 42 million lira.
Correct. The core business, the solar panels, did not cover the costs of running the company this year. It's an operationally unprofitable business.
But, and this is a massive but, I started the show by saying they made a net profit of over 2 billion TL.
Yes.
How on earth do you go from losing 42 million to making 2 billion? Did they find a diamond mine under the solar panels?
In a way, yes. But it wasn't diamonds, it was paper. This is the aha moment of the entire report.
Okay.
If you look at the line item for investment activities income, you see a staggering figure. 2.34 billion TL.
2.34 billion from investment activity.
Yes. The report specifies this is primarily Hisi Data Artusha stock value increase.
So let me get this straight. To put this in perspective, their actual business lost 42 million. Their side hustle, investing in other things, made 2.3 billion.
Exactly.
It's like a lemonade stand that loses money on lemons, but the kid running it won the lottery. That is the scale of the difference here.
That is the perfect analogy. This profit didn't come from a turbine spinning or a panel soaking up sun.
No.
It came from their portfolio of financial investments, specifically investment funds, increasing in value.
So are they really an energy company? Or are they a hedge fund that just happens to own some solar panels so they can put energy in the company name?
Based on these financials, it functions effectively as an investment holding company. The solar business provides a baseline, a tangible asset. But the valuation, the reason the profit is 2 billion TL, is entirely driven by financial speculation.
That is huge, because if I'm an investor buying an energy stock, I expect the profit to come from energy prices. But here, if the stock market crashes, their profit evaporates, even if the sun keeps shining in Çankırı.
Precisely. The risk profile is completely different from a standard utility company. And that brings us to the most dangerous disconnect in this report. Cash flow.
Yes, show me the money. You can't pay your staff or your service procurement fee with paper games. You need cash. What does their bank account look like?
It's tight, very tight. Cash and cash equivalents at the end of the period were only 78,604 TL.
78,000 lira.
78,000.
Wait, they made 2 billion in profit and they have less than 80K in the bank. I have friends with more liquidity than that in their checking accounts. How is that possible?
It's because that 2 billion is unrealized.
Yeah.
It's the value of their investments going up, but they haven't sold them yet.
So they are paper rich but cash poor.
Exactly. They started the period with about 17.6 million TL in cash. They burned through almost all of it.
That makes me incredibly nervous. If a piece of equipment breaks in Çankırı or they need to pay a sudden tax bill, 78,000 lira isn't going to fix anything.
No, it won't. They are living on the edge in terms of liquidity. They would likely have to sell some investments or, more likely, call up Lydia Holding and ask for a bridge loan.
Which brings us to debt. If they are broke on cash, do they owe a lot of money?
Short-term liabilities are very low, about 3.4 million TL. So no banks are banging on the door tomorrow. But you will see a massive number in long-term liabilities, 1.06 billion TL.
Whoa, 1 billion in liabilities. That sounds terrifying given they have 78K in the bank. Is that a massive loan?
No, and this is where you have to take a deep breath and read the fine print. That 1.06 billion is almost entirely deferred tax liability.
Okay, deferred tax liability. Translate that for us. Is it bad?
Think of it like owning a house that triples in value. The taxman knows it's worth more, and he's written down a bill for the tax you would owe if you sold it.
No.
But until you actually sell the house, that bill just sits in a drawer. You owe it, theoretically, but you don't have to write the check today. That is what this 1 billion lira liability is.
So it's a shadow debt. It only becomes real if they sell the investments to get the cash.
Exactly. It's not interest-bearing. It's not a bank loan. So their net debt regarding financial loans is basically zero. But again, it shows how everything is tied to those investments.
Let's zoom out to the balance sheet. Total assets jumped to 4.61 billion TL. Where is that value sitting?
4.1 billion of that is in financial investments, specifically investment funds. The tangible assets, the actual solar plants, the land, the equipment, are valued at about 480 million TL.
That ratio is wild. The energy part of the company, the stuff you can kick, is 480 million. The hedge fund part is 4.1 billion.
Yes.
The solar farm is just roughly 10% of the company's total assets. It's the tail wagging the dog.
It absolutely is. You are buying a portfolio of funds with a side of solar energy.
But equity ratio is strong.
Very strong. Shareholders' equity is 3.55 billion TL, which is about 77% of total assets. It's a financially stable structure, provided, and this is the key, provided those financial investments hold their value.
I noticed something interesting about their capital structure, too. Their paid-in capital is about 1.89 million TL, but their registered capital ceiling is 50 million. That's a huge gap. Why should a listener care about that?
That is a very important detail for a shareholder. The ceiling is the limit of shares they are allowed to issue. The fact that the gap is so wide, 1.8 million versus 50 million, means they have massive room to issue new shares.
Which could mean two things, right? Bonus shares, which are great, or a capital increase where they sell more stock to raise money.
Exactly. And if they sell more stock to raise money, maybe to fix that cash flow problem, it dilutes the value of the shares you already own. It's like cutting the pizza into smaller slices.
Good tip. Always watch the ceiling. Now, footnotes. Any skeletons in the closet? We touched on the related party transactions with the outsourcing.
Yes, besides the staff, they pay rent to EC, Gay Room and Cool, and for services from Lydia Holding. This is standard for holding structures, but you always want to watch how much cash flows out to the parent entity.
What about insurance? If a hailstorm destroys the panels, are they covered?
The machinery is insured for $5 million USD. That's solid coverage. It covers the replacement cost of the solar assets reasonably well.
And guarantees. I saw something about Trek.
They've given guarantees or pledges worth about 4.9 million TL, mostly related to their operations with the energy distribution networks. Nothing alarming there. It's the cost of doing business.
Finally, before we wrap up, how has the stock actually performed? The ticker is LYDYE.
It's been volatile, which you'd expect. During this period, it traded as low as 10,000 TL and as high as 21,000 TL. It's moving with the valuation of its portfolio, not with electricity prices.
So we've unpacked a lot here. Let's try to bring it all together. This is Lydia Yeşil Enerji. The name says green energy. The address says corporate Istanbul. The balance sheet says investment fund.
That's a perfect summary. Look, if you are buying this stock thinking you are investing in the operational efficiency of selling electricity, you are missing the big picture. You are investing in a management team's ability to pick financial investments.
And the electricity is a sideshow.
A sideshow which is currently losing money. The massive 2 billion TL profit. That is entirely driven by the valuation of their financial portfolio.
So for the retail investor listening right now, give me the three big takeaways. What should be on their sticky note?
First, don't panic at the operating loss. It's real and it's ugly, but the company has massive assets backing it. It's not going bankrupt tomorrow.
Okay, point one. Operating loss is bad, but survivable. Point two.
Don't get drunk on the 2 billion net profit. It's non-cash. It's a valuation gain. It looks great in a headline, but it doesn't pay the rent.
And point three.
Watch the cash flow. 78,000 TL is not a lot of runway. They are relying heavily on the parent company or asset liquidation to keep the lights on. If that support disappears, that lack of cash becomes a crisis very quickly.
It reminds me of that metaphor we used earlier. It's like a solar farm built on top of a bank vault.
Yes.
The farm itself is losing a bit of money, the tractors are rusty, maybe the fence is broken, but the vault underneath is stuffed with gold bars that keep getting more expensive.
That is a brilliant analogy. And as long as the vault stays full and the price of gold goes up, the farm is safe. The farmer can sleep easy.
But if the price of gold drops, or in this case, if the financial markets turn, that vault might not look so secure. And you can't eat solar panels.
Exactly. The risk profile here is tied more to the Istanbul Stock Exchange than to the sun shining in Çankırı.
This has been a fascinating look under the hood. It's a great reminder that you can never judge a company just by its name or its headline profit figure.
Always read the footnotes. That's where the real story is.
If you found this breakdown helpful, please hit that like button. It really helps us out. And if you want to catch our next deep dive where we decode the indecipherable, make sure you subscribe.
And share this with your investor friends, especially the ones who think energy company always means a boring, safe utility stock.
If you really value what we do here and want to support the channel, please consider becoming a member. It helps us keep the lights on, unlike some solar companies we know.
Yeah.
And there's always super thanks if you're feeling generous.
We appreciate every bit of support.
We'll leave you with this final thought to mull over. We talked about how Lydia Yeşil Enerji has a 4 billion lira financial cushion sitting in investments. That's a huge safety net if the energy sector faces a downturn. But if the financial markets crash, will those solar panels be enough to keep the company alive?
That is the question.
Thanks for listening. We'll see you on the next deep dive.